Stock market today analysis for October 27th, 2022. Nasdaq down 1.63%. S&P 500 down 0.61%. 10-year U.S. Treasury yield down 8.5 basis points. Gold down 0.2%. Bitcoin down 1.17%. And oil up 1.26%. We'll address that in a moment. Earnings still going on, which is one reason why Meta took a steep dive down today, dropping a little bit over 24, okay, closer to 25%. So yesterday Meta gave earnings reports after the bell. Microsoft, Google, A, and C gave earnings reports after the bell on Tuesday. So that information started trading on Wednesday. Same thing with Meta, aka your least favorite social media platform, gave earnings reports after the bell on Wednesday, and then that information started getting traded today. So today, after the market, Apple, Amazon, Intel reported, which that information will start taking effect tomorrow. And let's take a look at Google, or aka Alphabet, Class A. We see dropped on its earnings report, traded down more today, and money flowing out of there. And then the Class C, same thing, drop, looks pretty similar. Microsoft dropped on its earnings report on Wednesday, continued to sell off today, with yesterday, look at that, all that buying. It gapped way down here and all this buying volume. Couldn't get it to, it rallied it up to that 25-day moving average, and sellers just brought it down, but he still had more buyers than sellers, and look at how that candle closed. And then today sold off. Talk of the town, Meta, 24% gap from in this $120 to $135 range down here to 97, almost 98 bucks. Volatility, interestingly enough, has been going down. I know it says up 40%, but here's that one-day chart. So up, it opened. Where's our? Oh, that is not one day. It was one day. There we go. Opened here. Closed here. Not exactly sure how they're calculating up. I see down maybe. Oh, okay, that's the problem. There we go. Shrink this in. All right. One day. All right, 27th. Going back to here. Looks lower to me. I don't know. This is what I wanted to point out to you. Look at that. Volatility's been going down for the last 5 days. Volatility has been going down. We're closing at 27.39, which indicates that this is indicating less fear in the market. Indicating less fear in the market while these tech stocks just drop on the earnings. The which is down a little bit from yesterday. You can see it's still in this high range of risk, but the bond yields down across the board, except for I'm not sure what's up with a 13-week treasury. Probably something to do with me living in Hawaii and it being 6:13 p.m. Maybe that's resetting. So I think that the VIX is dropping down, less to do with actual stock prices and more to do with rumors of the Federal Reserve, the government, whatever, these quasi-governmental agencies coming in and playing with the markets in order to stimulate growth. Overall, what did the market do today? So we have S&P 500 dropping down. It's battling that 50-day moving average. Today, the 50-day today it is coming up unsuccessful to get over that 50-day moving average. We see for a while there's not enough money flowing out to be considered red, but there's not enough money flowing in to be considered green. So we're in this yellow area here, and I'm guessing this is a red. There we go, red volume right there. Kind of equal, right in there. It's about on par with what we've seen, even though this overall volume besides that day it's been a little lower, but you can see kind of on par there. So it looks like at the moment having a hard time with that 50-day moving average. Unsurprisingly, the tech sector also dropped after we see those big names in the tech sector dropping, and it's not even that close to the 50-day moving average. Not touching it, and couldn't get up to touch it. It's dropping off. This kind of gave us an indication that it might drop when we had this wick to the top there. And this is probably a red. A little light on the volume. Same thing. Maybe we're gonna have a change into green. Maybe. This is the maybe zone. Not enough to be red, not enough to be green. Healthcare. Even our lovely healthcare sold off today. Money's been flowing in. Got that weekly stochastic over the 33% red line there, and starting to get a pretty good gap, showing us that the past trend is gaining some momentum. Will it keep the momentum? Possibly. Now we're over all three moving averages for healthcare. Now it might be like this. It might be breakout and failure. We will see. Right now it is still above it, but that's definitely weak. We'll see how tomorrow plays out. It's not like a big one thing that we want to look for in selling or anything like that. Are we having a pickup in volume? I don't see any real good examples just sticking out at me, but volume's been kind of equal. The financial sector, we moved up today, even though we got these last two candles. Look at that, moved up. You got these candles with all this wick to the upside, and almost opening and closing in the exact same spot on the bottom of the trading range. Now here's an indication of what I was talking about. We got selling volume. Today we got more selling volume, and tomorrow, if we get third day of even more selling volume, maybe we'll see that this is getting ready to take a crash. It doesn't have to be necessarily a crash like a meta crash, but it could just maybe come back down here to the 25 or 50-day moving average. Maybe a downward splash instead of crash. How about the consumer discretionary? Kind of moving sideways a little bit. So closed here yesterday and closed here today. It's kind of a kind of sideways in a little range here. Massive increase in volume compared to the last few days. We can see the volume getting lighter and lighter for the last 3 days. So these 3 days, lighter and lighter. Today, some selling really came in. Industrials, green candle, higher in regards to the price action of yesterday. Well, it looks like the momentum is really running out of steam, right? All this wick to the upside, opening here, closing here, but selling pressure just pushed it down. Probably feeling some pressure from this 200-day moving average, but the volume was pretty decent and really couldn't move the price to get it to stay moved too much. But nonetheless, we have had this short-term trend to the upside, which this daily stochastic is indicating. IWM taking a downward candle today, but still maintaining over that 50-day moving average. So far, the 50-day moving average is supporting the price. Now, here we have the opposite. Yesterday we had a lot of selling, and look at our selling got a little bit weaker today, even though the candle moved. You know, it seems to be this debate in the whole trading world if volume is like a primary or secondary, or how much weight should you give to volume. And I think that the volume can be super helpful, and there's certain ways of trading. For example, selling cash secured put options on a stock that you wouldn't mind owning the rest of your life, and then if you get assigned, writing covered calls against it. There's certain types of trading like that where you don't have to really dial in the volume as much. You're doing directional trades, yeah, I think you got to get a lot better with that volume. But so we have let's see if volume is going to decrease tomorrow. See what that price action is going to do. Let's take a look at the Qs. Qs took a drop down, which would be expected. This is kind of like a technology index, something, I'm paraphrasing there, something like that. So we got that downward movement today, testing that 25-day moving average, getting some support there. And the dollar, now the dollar is back to fight on the bottom side, fighting to break up through that 50-day moving average. We see all of our tail to the bottom, and buying volume coming in, not like this. Look at this, progressively, right? That's what I'm talking about, where you see selling volume, more selling volume, even more selling volume, and you got the strong sell-off right there. So if buying picks up, move that price back up. If this price can break through the 50-day moving average just like it did here and get back above that, maybe we are going to continue this bullish trend. And a lot of times when we're seeing the dollar go up, we're seeing other assets, the price of other assets go down. And speaking of up, that's what we've seen for the 20-year bonds via TLT. And kind of as a general rule of thumb, when you see TLT going up, you tend to see the stocks going up. Or if you see TLT going down, like it has for this whole time here, you see stocks going down, which they have for a while. So that seems to be correlating pretty well. And what can we get out of this? Okay, volume, like look at that decrease. So maybe tomorrow we might see a little start. Maybe it's going to start running out of momentum, start petering out. It probably needs more momentum than this. And what this is also telling us is that there's more indecision going on. So for example, here, you got this candle. You can see on this second from the last candle. I don't know if my cursor is showing up. Sometimes it does and sometimes it doesn't. You can see it's opened there and prices pushed all the way up here, but none to the bottom, right? It opened on the bottom and just pushed up, sold off a little bit, right? But on this today's candle, you can see it opened here and it sold off lower, right? So it's a little bit of not knowing which way it wants to go. Where here, it wanted to go up, but just didn't know how high it wanted to go up. I'll pull back a little bit. We see over here, hopefully you can see my cursor. I'm going back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days back. And 11 days back, you see that green bull candle, but you see that high wick to the top. And then after that, you start seeing the selling come in. Right there. Start seeing that selling come in. So we're not seeing that, but we're seeing a little bit indecision. So maybe it's going to start running out of some steam. My prediction of seeing seeing the S&P 500 test the top of this channel, that is still in place. However, I was thinking we might see it by the end of the week. We're not seeing. I don't think we're going to see it by the end of the week. I definitely could be wrong, but with these technology stocks having dropping in their earnings, it probably is not going to be a good help for tomorrow. Apple, Amazon, Intel. So yeah, I still think we're gonna see a test of this. And at the moment, with all this kind of shakiness, I think unless there's more information about the government, the Federal Reserve, getting some sort of program going where it's giving the results of quantitative easing, even if they don't call it quantitative easing. I think maybe without that, it's going to be kind of hard to break through, because usually you need good earnings to break out. We're not really getting that great of earnings. Like, things are looking kind of weak on that side. So I think what I'm going to continue doing, I'm selling cash secured put options on stocks that I don't mind owning the rest of my life. I'm selling covered calls on positions I already have, and also I got a kind of a hedge position in a way on one stock. I bought a put with quite a bit of days on it, but the stock didn't drop down enough to really give me a good bang on that. So in the meantime, buying that put acts as protection, because what does buying a put do? It gives me the right to sell stock at a certain price. So that I started using that as a hedge, and I started selling puts just a couple strike prices above it, and that's bringing in some income. And so if the particular stock that I sold this put on, if it kind of keeps moving sideways and I keep losing money on the put that I bought, then I'll be offsetting that by the income I'm bringing in from selling these shorter term puts, which are like, with the amount of time I bought on the put, I could probably sell three different put options. And if it kind of keeps going up, it's possible I could break even. Maybe I end up losing a little bit of money, but or if the market tanks and goes down, then my worst case scenario would be that the stock quickly drops below the strike price of my sold put, but I have that other put as protection. So yeah, it's a little bit of a gambling speculation, and we'll see how it plays out. But that's like one position out of I don't know how many. The bulk are selling covered call options and selling cash secured put options, and taking some speculative positions, and my good buddy crude oil right here. So crude oil, what did it do? closed down just a little bit today. Seems like we're catching this this base right here, getting some support, which you know, it's just really been in this range. There's a big range here, and then there's smaller ranges within this range, and right now seems like it's not going to break above that 200-day moving average, but seems like it's going to be staying above the 50-day. And what's going to happen with that 20-day? I don't know. I'm doing some pretty darn short-term trades here, just kind of sometimes within a couple minutes, sometimes within a couple hours, but I'm putting these positions on and taking them off. And if I get a good opportunity to possibly sell an option out of the money up here, out of the money down here, I'll do that, which I really haven't been looking for it because I'm having so much fun day trading it. How about GOLD? Well, unfortunately, it's still above 800 bucks. I'm really hoping it drops down to 800. If it can go down to 300, I would like it even more. I would really, really like it at 3. However, it's up here all the way at 1669 and seems to be kind of building a base here. We see we got a bit of a double bottom. You know, maybe you could say we have, can we do this? See if this is going to be easy. Oh, color is that? Can we do a different color than red? How about blue? We got a bit of a, is that starting a weak W? Maybe. Possibly, possibly not. But definitely seems to have a bit of a double bottom there. I think one thing that's good to recognize, whether you want to trade, whether you really want to be trading the paper price of gold or not, one thing to recognize is this is the futures price, right? So you can ask yourself, what's the difference? There's a futures price, paper contracts, and then there's the actual commodity. And how are these two related? Is this the actual price of gold? If you went out and decided to buy an ounce of gold, is this what you'd pay? What would you pay for it? This is what you'd pay for the futures price, the future contract, right? It's a contract, it's a paper agreement. But if you wanted to buy an ounce of physical metal, how much would you pay? So just make sure you're differentiating those two things, at least in trying to logically think about investments, even if you're not trading gold. So I think sometimes it's good for whatever you're going to be trading, just to get more rational, more understanding how these things work. Because if you just watch a lot of news, you'd think that this is the price. I used to think that. I went out and one time a while back I was trying to buy metal and I'm like, what the heck? I thought the price was this. And sure enough, that was not the price that I was paying. Bitcoin. Okay, still above 20,000, but we're not. Maybe we're building a base here. Could be, but basically it went sideways, right? All the way up here, opened here, went all the way up here, but now opened here, all the way down here. That's basically sideways. So we're right in this range. It could be building support. If we keep seeing it move sideways along here, then maybe we're going to see it build support. If it builds this, I don't know how long, but if it builds something like this long, but just up a little higher, that's a great sign for the bulls. Bears might be getting a little excited because if it keeps breaking out and then failing, kind of like it did here, then you know, I don't know. I tell you what, I saw this guy at a store today, and it said he had a shirt on with candlesticks. It was kind of in a Nike swoosh, and it said, "Just hodl it, just hodl it, hodl it," whatever that word is. And for me personally, I would not. Me personally, now this is not financial advice. I ain't got no licenses, ain't got no training, ain't got no proper English, so don't take investment advice from me. Don't take trading advice from me. You got to talk to all your attorneys. You got to talk to your doctors. You got to talk to the president. You got to talk to everybody to find out what's best for you. You can't make up your own. You can't make your own decision for what's best for you. You got to talk to other people. So talk to those people. But for me personally, I'm going to go out on a limb. I'm going to take a risk. I'm going to give myself financial advice. If I was in a state, if I was in a free enough country that allowed me to trade Bitcoin via my Tastyworks brokerage, which other states are allowed to do, but I live in a state that I'm not free enough to do that, and that's just the price I have to pay for living in quote-unquote paradise. If I was in a free enough state, I would not be hodling any type of idling Bitcoin. I'd be trading. I'd be opening and closing. I'd be trying to capitalize on this, and then I'd be shorting this. I'd be going long, I'd be going short. I would be trading. And what I would do, the way that I personally would do it, I would throw on some sort of indicator, like let's say just like that. I'll put on something like a MACD. Is that the be-all, end-all? Is that, you know, I would probably tweak it. I'd probably play with it, see what's going to work a little more before I decided to, you know, go with it. But I'd start with something like this. Start with a MACD. And then I'd start with, I'll look at the monthly chart. And then go back to where it's going to let me go. Okay, no data on the MACD with that monthly. But I look at the monthly chart and I see what's the most data they'll give us. Not much. That's it. Sideways, right? Boom. Look at that. Basically gone sideways. All right. Basically, for all intents and purposes, it's in. You know, if you really want to get analytical on it, then it's basically gone down, right? Because now it's here down here at 20, whatever. It opened here, but you know, it traded down here. Opened here, closed here, so it's down a little bit. And then we're going to drop this down to the weekly chart. Let's go back to 3 years. Okay, weekly chart giving us some report on the MACD. Okay, kind of going up real slowly on the weekly, going up. And then I'll drop it down here to daily and kind of weekly, not as far as 7 days, but as far as not strong. Kind of going up. And then maybe I'll drop it down to the hourly. And I would, if I was sitting around now waiting to trade, I would wait until this starts getting in alignment with the previous higher time frames. So I wouldn't buy right now, and I wouldn't short right now. I'm going to wait until these time frames are matched up and try to catch a little bit of movement to the upside. But look at this, man. I don't know if I was doing that. I guess it depends too on how much can you get on like a penny move or something like that. How much can you get on a 10-cent move or something like that? I'd have to look into that, you know, depending on how that goes. Because look what we have here on this hourly chart. Sideways, down, sideways, down, sideways, down, up a little bit, just basically sideways. So down, sideways, down, sideways. It's not looking super exciting, but you know, maybe if this starts turning up, you see some movement in there. There's other factors, you know. You definitely have your the asset you're trading, and then the asset you're trading. You know, what's the price point of it, and how much. I don't know what it is. If it moves 1 penny or $1 in one direction, how much do you get? There's like things to look at on that. So for me, for that type of trading, this is the one that I like. I like this because it moves 1 penny and it changes your position by $10. So you can get some good scalping trades, some good short-term trades. However, if you are not paying attention, you're gonna fall victim to the margin. You're gonna lose a lot of money really quickly with that margin. So maybe you don't want to be doing that. So you know what you do? You paper trade. You paper trade this stuff. Whatever you want to trade, unless you've already been trading for a while, even if you have been, then paper trade anyways. Anytime you're doing something new, paper trade. Paper trade that stuff. Paper trade it. Go to ifsuccess.com. Download the stuff. Get them all. Don't just get one, get them all. Why not? They're free. This is what you start with. Start paper trading with a cash secured put option. Open up, read this stuff, get an idea of how to select a stock. Find a stock in your paper trading account that you can buy 100 shares of. And I would suggest have it be realistic to your actual income. So if you get a paper trading account and it's letting you paper trade, with like $100,000 of cash, but when you actually open up your real account, you're only going to have 5,000. Then why don't you pretend you only have 5,000 in your account? And don't be trading stocks that require you $20,000 to purchase, to have a cash secured put option. Trade something that it's going to be realistic to you, so you can actually get that experience. And then from there, start getting your feet wet by selling cash secured put options. Then if you get assigned, sell those covered calls. As you do that, you're looking at stock charts. Then you can start maybe timing some trades, maybe buying puts, or buying calls, or buying some option spreads, something like that. And then grow from there. And you'll probably end up having a lot of fun in life. I know I do. You guys have a fantastic day. I'm off to have some more fun.